So what we saw is Friday when the equity market sold off, you got this nasty candle. It did close below this channel. So look at the beauty of this channel here, how we've been hovering up and down inside of it really since June. But the negative here is that we saw a close below. Now you haven't confirmed, but as far as I'm concerned, this is a very, very nasty little pattern formation. And it's likely we're going to go retest this yellow trend line here, which happens to be the high from 2017 right here. That's going to be a big line in the sand. If we break that, then you see that move down that I've been calling for as my secondary target. You know, my first target was 20,000. We talked about it last year in Dubai when I was there in October 2021. We said 20,000. Now I say it's going to actually go lower than that. Next stop is going to be 12 to 13,000. So we are headed lower, and it's going to be a rough road along the ways here.
We can't discount the fact that we've already been down 70%. What's another 50?
True. Right. And the scheme, and you're right on this, right, is that, you know, from the drop from 69 to 21 and change, if it's only got another really about 9,000 to go, that's not that crazy. I agree.
All right. I'm not advocating for people to start buying on a 50% dip right now. I'm just saying, you know, in the bigger term perspective, if you're somebody like, for instance, like Mike Novogratz, CEO of Galaxy, he's a couple weeks ago he made headlines by saying that he still thinks Bitcoin's long-term projection or potential is $500,000 a coin. And if you're of the view that Bitcoin will eventually hit $500,000 a coin, I'm not saying will, I'm just quoting Mike here. You know, if you agree with Novogratz, then what's the difference? $20,000, $12,000? Your buy-in at this point doesn't really make a difference if you think of it that way.
Right. And to be fair, that he's correct on that. And I actually have that same long-term view. I'm a big long-term bull. I'm just a shorter-term macro economist looking at the cycles and everything like that. So the beauty of 12 to 13,000, it gets us to that 80 to 85% correction that Bitcoin has done every single cycle. So that kind of gives us a basis of what to look for. It's also a strong technical support. But you're right. I mean, if you're a long-term investor and you're not going to look at it for 10 years or 5 years, there's nothing wrong with that. You just have to, this is the key, right? You have to be able to weather the emotional storm, because I know a lot of investors out there, they might buy in at 22 or 21. And when they're down 40% at 12, they might panic and unload, because you're going to hear a lot of negativity out there. And if you have to be able to control that and shut it out, and then you're okay to do that. But if you're someone who's very emotional and you're going to exit the trade at that point, and then it goes to 50,000, then 100,000, that's not a good scenario for you to be in. So if you have emotional control, that's fine. Start inching in. I also advocate for dollar cost averaging. Buy a little here at 21, buy a little bit more at 18, buy some more at 15, and so forth, versus just going all in at one specific level.
You know, the Ethereum merge is coming up in about 3 weeks or so. People are speculating that might play a major role in boosting up crypto prices overall, especially Ethereum. I wonder if this is going to have a major impact on the price, in the sense that if you assume that the stock markets continue to fall, let's just make that assumption, and if you assume that Bitcoin has thus far, well, not assume, but if you note that Bitcoin has thus far been correlated with the Nasdaq, and if you assume this correlation holds, well, should the Ethereum merge, which some are saying is one of the greatest, most important crypto events in the history of crypto since the beginning of Bitcoin, can that actually make a price divergence between the crypto markets and the stock markets, you think?
Well, that's a good question. I don't think so. Not at this stage of Bitcoin's life cycle. I think down the line, you will see a kind of a difference, and Bitcoin and the crypto market start to emerge. But right now it is tied to a risk asset. I know a lot of people said in 2021, oh, it has nothing to do with the stock market. It'll go up when inflation goes up and the markets sell off. We obviously learned that wasn't the case. So I'm in the camp that we're going to see crypto sell off with the stock market. I have a big downside move coming later this year in the stock market. And that's going to be the catalyst to really take us to that 12, 13,000 marker on Bitcoin. And I actually think that Ethereum is very likely going to head down to this next target around $645. So I have it priced in. That should be the level that Ethereum hits when Bitcoin hits 12 to 13,000. Key major support, it was the beginning of the big bull market. This would be 100% retrace to the start of that bull market. Major support right here as well.
Every time in the past you've had a major collapse in the price has always touched above the 200-day moving average. So if you take a look at, exactly that line was above the 200-day moving average, then it came down right here, right there, and then it came down sometimes below the 200-day moving average, sometimes, still. But anyway, the peaks have always been above the red line, the 200-day moving average. So I'm just wondering if the peak needs to go above that line again for it to come down.
Yeah, and the answer is it's very likely, or I shouldn't say likely, but it's very possible that that does happen. I'm not in the case of that. I mean, you can see over here when we broke lower, we came back just shy of the 200 right there. So it is possible, just like Bitcoin. Like if we go to the Bitcoin chart, you can see here, we haven't even come close to the 200 on Bitcoin, which is kind of sad to think, right? I mean, it hasn't even come close at all. But you can see right here, it did hit the 200 before that next cycle to the downside. The problem here on the Bitcoin chart is that this was a very defined bearish pattern, and now you're below it. So that is problematic. Now, again, we have to hold this 19.6, 19.5 level, which is that key level from 2017. Otherwise, again, we should be heading very, very quickly. And again, just watch the stock market. I strongly encourage everyone to just keep an eye on the stock market. That is going to be your indicator. If this continues and we continue to see this fall on the S&P, I don't believe that the crypto markets can withstand that. Take a look at the DXY chart. Let me punch that in here. And we've seen the dollar basically up to a double top up here. But look at the run on the dollar basically since that move from the Fed, or since the minutes came out. And that is putting major pressure. The stock market does not like a strong dollar. It wants a stable or slightly weaker dollar. And that, again, is problematic here for the market. So as long as the dollar is going higher, it's telling you that, again, investors are moving away from stocks. And that's why we're seeing the selling that we're seeing. And I think it's important to understand, what does a strong dollar mean? It means people are going into the US dollar for safety. And what they're doing here is they're saying, all right, the Fed is going to drive us into recession. And therefore, and they're not lightening up, even though we know the economy is weakening per economic data. And so they're hiding in the dollar. They're selling risk assets that might be affected by a weaker economy. And that, again, is a kind of an issue that the markets are very freaked out about right now. I actually think the dollar is near the end of its run. If we go to your weekly chart here, I still have these two trend lines, which we're now retesting. You've got a double top in this vicinity. So I'm actually in the camp that in the near term here, we're going to start to see the dollar roll back over. I see further downside in Bitcoin. I think that the stock market is going to make new lows this year. And again, that's saying something, because we've had a huge bounce on the S&P. So by end of year, I'm actually saying that we will take out these lows down here at around 3,600 on the S&P, 3,500. And we actually should go even lower than that. So it's going to get nasty towards the end of the year as the economy, or as investors start to recognize that the Fed is not going to come to the rescue of a recession. I think the next jobs number is going to be a lot weaker. We're going to start to see that weakness filtering into the jobs number, which is a kind of a delayed reaction, as we know, economically. And that is going to make the markets very, very scared, with inflation not coming down even more.